many businesses are exploring and relooking at their debt situation, because if your income is significantly impacted or significantly lowered, this is an area where you are very, very concerned, because your debt collectors still want to collect on the payments or the money that you owe them. So one of the things that I've advised many of my clients to do is, one is, let's see if you can refinance during this time, because there are several organizations that are offering small business loans, to where if you have a loan, an outstanding loan that has a higher interest rate, maybe refinancing right now could be a good option for you, because you can save thousands and thousands of dollars by just refinancing and getting a loan at a much lower interest rate, because there are interest rates out there that are so much lower than what they've ever been. You could see yourself saving money and being able to help your business survive that way. Another area is just picking up the phone and calling the bank, or calling the financial institutions that have issued you loans, or calling the bondholders of your business and actually negotiating different terms. Many debtors are very, very understanding during this time that, hey, every business in the world is negatively impacted by the impacts of coronavirus. And every business is having to adjust and having to figure out and navigate. Some businesses are able to figure it out a little faster, a little sooner than others. So one of the things that businesses and debtors are open to is renegotiating the terms on your debt, whether that be deferring your payments and them still charging interest, or the interest still growing, or whether that's them changing just the payment terms. Maybe you can still make payments, but you need to make, smaller payments. Whatever it is be proactive and have the conversation with your debtors about it. Because one of the worst things you can do as a business owner is to just ignore it and just hope it goes away, or just hope that they just understand and you not communicate at all. That is one of the worst approaches you can take, is take the time to have the conversation with them, negotiate what can you do, and also just understand, hey, what can actually work as a mutual benefit. And even in areas where it comes down to like your lease payment, where you're tied into a lease for so many months or so many years, maybe you can renegotiate that and say, hey, you know what? Because we're not generating income because our business is closed, can we just get free rent now for the next few months and just extend the back end of the lease? There are many, I guess you'd say, landlords that are open to that strategy, or they're open to doing an adjusted payment during this time and then adding it to when things go back to normal, or whatever the new normal is. Explore your options as a business owner. The other thing that many are looking into are the loan programs, that the small business loan programs that the government is instituting. I would definitely say, if you are in a position to execute on those, you may want to consider those very, very much. Now, you do want to be very, very clear about what the terms of those loans are, because there are several people that have contacted me and they've said that, I've heard that these loans are refundable, so I can just take the loan and I can use it to keep my business open, and then the government will just write it off when things go back to normal. And I said, you may want to understand what the terms of it are. If they are saying that it is refundable, whereas in one case we looked at it, we said, okay, what they are saying is, if you use the money for these purposes, if you use the money to cover, salary and expenses for your employees, or if you use the money to cover things like your rent for keeping your business open, that or a portion of that may be, I guess you would say, cancelable, or maybe forgiven at a later period of time. But you want to make sure you understand it, because as we all know, there is no such thing as free money. So you can't just expect that, hey, because they're going to give me the loan and then they're going to forgive it later. You want to make sure you understand the terms. And then I think also when it comes down to your revolving lines of credit. Now, revolving lines of credit may be things like credit cards or lines of credit. If you have a line of credit, it may be wise for you to actually draw down on that line of credit, because what happened in 2008 during the financial crisis is that there were a lot of people who had lines of credit, but because the banks didn't have the money, their lines of credits were canceled, and there were some businesses that were saying, hey, no, we'll survive, we'll make it, because if we ever need cash, we can just pull it down from our line of credit. But what they found out is several months after the crisis hit, when they tried to pull down on their line of credit, the bank had actually canceled it because the bank didn't have the cash to give them. So one of the things that you may want to do if you have a line of credit is to go ahead and execute that now. You don't have to spend the money. You can put the money in a separate account and just hold it there. That way you know you have access to the cash. And then on your revolving credit, whether it's your credit cards, be very, very wise about how you use your credit cards during this time. There are some businesses that are paying their regular expenses using a credit card. They're like, hey, I don't have any customers coming in, so I'll just put it on a credit card. Be very aware of how much that's gonna cost you in interest. Typically, credit cards have some of the highest interest rates, so you wanna make sure that you're being very, very mindful about how you're using your company credit cards. Until next time, I'm Terrell Turner, the host of Business Talk Library.